Hey YouTube, this is Zach with Achilles Financial, and we are back with another stock and review. We have another earnings play that we're going to be looking at today with Slack, and that ticker symbol is WORK or work. The reason that I want to look at them is similar to the play that we made with Zoom, or at least evaluated. I ended up not playing it because, like I said, it was going to be very expensive. I will highlight what happened with Zoom because this is going to directly feed into our expectations. This is a company that doubled in revenue. They blew their expectations out of the water, and look at what happened. When they announced how well they were doing, they were up nearly 5% after hours, or rather they were nearly up another $10 after hours, and now they're showing that they're around 203, 204. It'll be interesting to see what happens here in overnight trading and in pre-market trading for now for Zoom. But I mean, look at this. If you go down to their EPS, that's a pretty wide margin right there. And this is after all stock-based compensation. And they absolutely killed it in terms of total revenue. So this is a company, though, that look how much was priced in going into earnings. I mean, this was all this week. So the company had already done well over the past 3 months. So if you look at the 1-year overview, they didn't even see that dip that a lot of the companies saw going into March. I mean, look at this. You're going down from 150 down to 113, but previously they were valued around $80 to $90. So, and today they're sitting at 200. I think they did crest, or at least touched, the 220 mark. So this company already had a lot of that expectation built in. So merely doubling revenue is not enough to justify a higher valuation. I think what people were really expecting or wanting to hear is how they can double profitability or triple profitability. And there's still some kinks to work out there. So where does that leave us on the work play? So Slack is in a very similar position where they're going to see that huge expectation. But look, they've just reached where they were at their IPO level, and look at what they've done over the past week. They're up nearly 20% this week. So what I'm looking for here is, are they going to be making the same move that we just saw from Zoom? So after hours today, you can already see this has actually changed since when I checked it probably 5 minutes ago, that there is some after hours movement. Is this going to reflect Zoom? We'll find out tomorrow morning in pre-market earnings. But what I'm going to be looking for here is either a credit spread or a put. The reason for that is because I think this is a very high valuation that has been priced in already. I mean, look, we're up 20% over the past week. Over the past month, we've nearly added 50% in value to the total stock. I don't think that this is necessarily I don't think that they're going to be able to justify that. When we look at the options, we're also looking at much lower premiums than we did with Zoom, and that's strictly due to the fact that we have a lower volatility here. As I recall, the Zoom play we were looking at, they were expecting an 8% move, and that was on the upward direction. The other thing I'll highlight is this is going to be the day after earnings, so not a lot of volatility expected the following day. It's all going to be on the run-up. So the key thing to look at here is, are these going to be priced appropriately? Again, it's a lower price because the stock is a much lower price, as well as the expected volatility is a little bit lower, but we're still looking at 175% here. The reason that I highlight that is because, as you can see just through some of these numbers right here, people are interested in what we're looking at here. And this is not inclusive of the after hours moves in terms of that pricing. So what we're looking at is, are these going to be moving favorably going into earnings? I don't plan on making a purchase prior to maybe an hour before earnings are announced to see if we want to either run that up or maybe bet against the market here on this one. Again, the reason for that is because I'm strictly following that Zoom play, but just look over the course of the day. At the end of the day, they were really kind of closing in around where the same price point that they opened. So there's a lot of that volatility already built into this. I mean, around here, and we're just moving a lot for a stock that I think is going to have a lot of the same problems concerning security and profitability. So unless they're able to come out and say, this is how we're translating this increase in revenue directly to the bottom line, I don't see a big win here. So the ones to be looking at right here, I'm going to be looking at the puts, and depending on what we look at, again, these are pretty expensive, implying a very volatile move. I need to see these numbers go down, and some of that's going to happen just going to Friday. So I may not look at just this date, but again, they get more expensive from there. So I'm going to be watching the puts, and we may do a spread or just buy an out and out put. So that's what we're looking at. If you are going to be making a work play, a slack play, let me know in the comments below. I'm looking forward to it. Talk to you guys then. I'll see you. Bye.